This session is sponsored by Comerica Bank. To grow your winery, move beyond everyday banking. And Turrentine Brokerage, supporting growers and wineries since 1973 by providing the best data-driven analysis to create profitable supply strategies and opportunities.
Hi everyone, George Christie here with Wine Industry Network. Welcome to the second session of the day for our Bold Predictions Conference. This one is the state of the North Coast grape and bulk wine market. The session is going to look at exactly that. How have things changed and what might we expect the bulk wine and grape market to look like as we head into 2021. Now, before we get started, I want to thank our sponsors, Comerica Bank, and Turrentine Wine Brokerage. Comerica Bank, it's the first time working with them. Thank you so much for your support. We're very much looking forward to working with you going forward. And Turrentine Wine Brokerage, you guys have been with us since literally day one. You've been incredible partners, and thank you so much for your support. We couldn't do this without your help. Now, before we introduce our speakers, I just want to encourage everyone to take advantage of the chat feature. Our presenters are going to be in the room. They're going to be taking your questions on as they come in real time. So please take advantage. We want to make sure that the sessions is as interactive as possible. So Bryan Clements was not able to join us today, but the good news is we've got Steve Fredricks. Steve is the president and partner at Turrentine Wine Brokerage. He's going to be stepping up and taking Bryan's spot. And he's going to be joined by Bryan Foster. Bryan is the national sales manager of strategic brands for Turrentine Wine Brokerage. So those guys are going to give you like a little sense for, what just happened and what we can expect to 2021 to look like. So please join me in welcoming Steve and Bryan to the virtual stage. Hey, Steve. Hey, Bryan. It's good to see you guys.
Good to see you.
Hey, thanks so much. Thank you so much for taking some time to be a part of our Bold Predictions Conference, kind of last one of the year. And what a year it's been.
Yeah, it has been quite a year. And thank you, George.
Oh, you're welcome. No, it's our pleasure. I got to tell you that this is one of the sessions that people are really looking forward to. It's been such a, an unpredictable situation out there with the grape market, the fires we experienced, the bulk market. And I think people are really looking forward to hearing what you guys have to say today.
Well, thank you.
You're welcome. Listen, I'm going to join the audience. I'm going to hand it off to you guys. Once again, thank you very much. We'll let you take it from here.
Great.
Thank you.
Thanks, George.
Good morning, everybody. I'm Steve Fredricks, president of Turrentine Brokerage, and I'm joining Bryan Foster, our national sales manager of strategic brands, to sort of give you a market update from the bulk wine and grape standpoint. But where Bryan's going to start off is being our national sales manager for strategic brands, is looking at the consumer data from the point of view of the buyers we work with, of the clients we work with, and that are kind of instrumental and part of the market cycle to help us move through excess, to give an update of what's the landscape there as we finish out 2020 and we move into 2021. So Bryan will start, and then I'll come back with a bulk market and grape update. Thank you.
All right. Well, thank you, Steve. Good morning, everybody, and thanks for joining us this morning for the industry update. As Steve mentioned, I manage the strategic brands side of the business on behalf of our client base. And what I'm going to cover this morning is just a brief touch on the three-tier overview, as you're seeing here, some off-premise trends, a peek at the global trends, as well as some consumer and market outlook data. So this is a snapshot of the distributor network. And as you can see, obviously, they've all been dealing with the pandemic and the effect on their business, and specifically where their business is driven, obviously, by the off-premise market. But for sure purposes of presentation for the top 4 distributors, as you can see, Southern Glacier being the top, and RNDC into the second spot, which has been consistent over the last 2 to 3 years from the recent purchase of Young's Market a few years back. And then Breakthrough Beverage, as well as Johnson Brothers. Numbers 1 and 2 account for approximately 54% of the total business, and the top 4 of the wine and spirits business, and the top 4 account for about 72%. One notable point with the Constellation sale transaction actually coming to a close the first half of calendar 21, RNDC and Johnson Brothers will be benefiting in a big way, and specifically RNDC, because they are basically a Gallo Alliance house along with Johnson Brothers across the U.S. And Southern Glacier doesn't really represent Gallo in a lot of marketplaces, but again, there should be a little surge in their revenue share, and as far as the representation for those brands, part of the sale. So the natural thing to look at would be the depletion data, and this is courtesy of Dale Stratton at the SIP overview, SIP trends, and thank you again, Dale, for that. So this is now a new source that's come to play in the last year or so, and it's depletion data. Typically, we always see market trends via Nielsen. This is truly from the deck of all the depletions that compile for the back of the house that Dale's team puts together via SIP. So as you can see, in March, as we started, with the index being below here, and you're seeing the total spirits and wine business, and wine being the blue line, that during that March period, you could see as we climb through the COVID, the wine business in depletion trends have been consistently down and kind of peaking up and getting to a flat position as we speak. And that has a lot to do with the fact that the destocking, we've heard a lot of that going on. There's been a lot of that over inventory at the distributor level. Hate to use the adage, but I will, is from a supplier standpoint, a loaded distributor is a motivated distributor. And this is a great example of as they work through the inventories. And this actually, from the Gomberg, really depicts the story about the destocking. And you can see those suppliers that are highlighted have been basically been dealing with that destocking, and that is while their shipments are down, they have been depleting. The distributors have been depleting that overstock, and we see while this is through July, we see basically Gomberg's is typically about 90 days behind. We should start seeing some positive trends on the shipment data for Gomberg. And again, this is the report card that most of the wineries look at as regards to Gomberg and the tax paid shipments. No presentation would be complete if we didn't at least talk about the size of the prize. These are the top states that in the country as far as for wine and spirits. And for the wine perspective, these states account for almost 150 million cases, or approximately 50%. No secret to a lot of those here on the webinar that you've been dealing in mass in these accounts over the years. That obviously is driven by the chain store marketplace. Market dynamics dictates volumetrics, and obviously California, Florida, Illinois, and Texas are big chain store markets, and that really dictates obviously not only the depletions, but also the scans through at the store level. Which this is a more granular view of the consumers and where they reside. So again, flashing on those top states, it's no secret that New York, LA, Dallas, Chicago, and so on, there's where the top consumers lie. And again, why I'm showing this is we all kind of know what's going on with the shelter in place and the fact that a lot of these businesses, both on-premise and off-premise, have been impacted by their business and their segment. So while this is, kind of the rather master of the obvious, these are still marketplaces that hopefully your sales forces are deployed to the appropriate markets to take advantage of the opportunities. So now let's look at the off-premise channel, and this is courtesy of Nielsen, and that's basically capturing the total CPG business, restricted living, reopening, and what's now been introduced as the next normal. So that next normal be an area we're going to talk about a little bit further, because as we all know, many of the marketplaces are now going back into shelter in place. So as you look at this data, and specifically the black line being the CPG business, no kind of surprises, but everybody has been pretty much CPG as far as the wine business has been kind of trending along the same line. but the next normal was projected to kind of fall around 15% or so. I kind of think that we'll probably see an upward tick, particularly with November, December, and December now upon us, that we'll start seeing a bigger tick that will be very similar to what we saw potentially maybe right around here in that April restricted living and so on. So that's one thing to take into effect. Drilling down a little further, and that is into the price categories, the volume versus dollars. As you can see here, the index, the reopening being the pink and the purple being the next normal and black representing the COVID year to date. No real surprises here, kind of been trending along where we kind of see the business as it's been in double-digit growth. While many pundits have been saying the wine category has to do in excess of 22% sales to make up for the lost on-premise, we're relatively close. Spirit activity has been very, very large, and obviously that has a lot to do with the closures of the restaurants and people consuming spirits on a regular basis via their home. And then, as you can see, the volume here versus the dollars. So it's very considerable as we look at the trends. And then to kind of look at the pre-holiday trends, and I know this is probably old news, but that September, October, given the ongoing restrictions in the bars, a second round of closures in the marketplaces, again, like I mentioned, here's where we're all trending. FMG is the fast-moving consumer goods. So as you can see, that's the barometer that the industry uses. And as you can see, we're trending in the alcohol above the fast-moving consumer goods. And the wine category is performing right around that 17, 18%. And the volume and value, as you can see, respectively. The interesting thing to look at is the total wine category, 18.9% off-premise channels. Sparkling and champagne are doing relatively well, up 37% and 71% respectively. And it gets back to the old adage that you just don't need to get or consume sparkling wine or champagne during the holidays. It has been adopted as a everyday consumer item, consumption-wise from the consumer standpoint, and there should be a pretty bullish business for the sparkling and champagne categories as it rises. And then kind of looking at the price segmentation, and here's the trading up effect. As you can see, again, the index being the restricted living and the reopening, the price point categories, the interesting thing is from $10.99 through the down to the $3.99, these categories segments make up still approximately 50% of the business. And the interesting thing is, as we look at the over $14 and above, you could see considerable increases, while the volume is not as large as that of the bigger base down below, as I mentioned, the lower price point. What's occurring here is a lot of consumers are splurging. They've got discretionary dollars, and they're not spending like they normally would, going to movies and restaurants and bars, and hence they're doing it out of their home consumption periods. The other one critical area to talk about is a disruptor, and no presentation would be complete without talking about the seltzer disruption. The seltzer category has by far surpassed probably whatever the wine cooler category catapulted the wine industry back in the early 80s. So when you look at some of the declines, and specifically right here in this data, this 40% gains from the beer, wine, and spirits, this is the everyday natural organic sales growth of the seltzer category. And then 12% of new consumers are coming into the category. And the more interesting is the 48% are switching. So as you can see, the beer business has been really switched from a everyday Bud Light to a Bud Light seltzer consumer. And the wine industry has also lost about 25% of their consumers to the seltzer category. Again, part of it is the lower alcohol, lower carbs that the consumer is yearning for as they've been consuming on a regular basis. The interesting thing is, when you look at the Nielsen value and volume ranking by varietals, if you put the movement, the actual dollar value of seltzer is running right around 2.5 billion. So that would be literally right below the Chardonnay category as far as sales, outpacing the red blend. So that's a great depiction of what's really affecting the wine category and the disruptor that's taking effect when you look at that in sheer value. And again, the seltzers have been moving at about a 65% growth rate, which accounts for that 2.5 billion. Last year, it did about 1.5 billion. The other thing to really look at is the consumer buying habits. And during the pandemic, it's shown that consumers consistently are purchasing the brands that they know and they trust. And as depicted here on the right-hand side, this was basically back in August, a year ago versus August. You could see those highlighted, those brands that were really showing higher yields in business, Black Box, Barefoot, Woodbridge. But these are all household names, KJ, La Crema, Apothic, and so on, and Franzia. And then as you look at the off-premise through September, the top 25, no surprises here other than the private label business, specifically, up in sales, but then also in sales growth. And again, that has to do with, Nielsen is the grocery channel business that they sell their data to them. So the mass, the military, and so on. So as you kind of look at that, the prevalent piece of the private label to shed light on them, I'm going to take the next couple slides to talk specifically about the private label. And as you look at the private label business, capsulating last year up to the end of the year, you can see that the private label business has been growing. Not to make a shameless plug, but I will, is that, as Steve mentioned, I run the strategic brands. With Turrentine, we focus on the alternative route to market retailers, and those are retailers not depicted in this Nielsen data. So the Trader Joe's, the Total Wine, the Aldi, the grocery outlet. These are alternative route to market retailers that use their own logistics companies and network to go to market on a direct basis. So this particular business, their business is not communicated here, but just know that there's a large portion of that business across all marketplaces. And the interesting thing is when you look at the data again as price point, here you could see that the private label business, now that the reopening, while during the closure was doing up 30%, now it's around 6.5. These particular price points basically account for well over 77% of the business. So the consumer, while they're looking for their favorite brands, it is driven by a price point. While you can see that there's been good growth in these higher than $10 approach, the volume in the private label business and mass in the grocery channel Nielsen data, is driven, really below the $10 range. So I thought that was an interesting thing to kind of look at. Now let's take a brief look at the import category, and the impact of the tariffs and the pandemic has been quite a detriment, as we all can imagine, what's occurring across the world. And back when the tariffs started back in October, this slide really kind of articulates the point of there were a lot of the importers, suppliers loading in before the tariffs took place in October of last year. So that's what's caused a big load in. And then we saw a lot of activity as it started to demise, not only because of tariffs, but then as prices rose with the tariffs impacted. France, Spain, Germany were highly affected. Italy, interestingly enough, were not affected, as well as New Zealand. And as you can see, the French business was down 37%, New Zealand while trending up, and Portugal enjoying some good growth. The interesting thing is France along the lines has been experiencing in the last 10 years up to now, 10 consecutive years of volume growth. And as I mentioned, again, the declines really affecting the France, Germany, and Spain. And the interesting thing is you look at the retail perspective, Stella Rosa, 19 Crimes from Australia, and Kim Crawford, while doing very well, as well as the Yellowtail. And again, Yellowtail driven by the price point. Just really articulates the point that, Italy and the Prosecco business has been up famously. Obviously, Stella Rosa with their sweet wine base and the consumer, and then 19 Crimes with their brand through Australia has been doing very well on an ongoing basis to really trend line to some great volume increases. Switching gears to the consumer, there's a little glimmer of hope. Deloitte just did this study a few months back through their survey, and the retail categories and clothing being the top two. Look at food and beverage. Food and beverage is the consumer is going to spend basically at retail, a total of their spend would be 14% at the food and beverage, and the average category spend being 200. This, to me, brings back the old adage that when I got into the industry many years ago, that when times are hard, people drink more than they eat. And I think right now we're seeing this. People are consuming at a little more rapid pace. They're not going anywhere, and they're trying to kind of keep an upper view of the marketplace, and they're experiencing and enjoying some of their favorite beverages at home on a more regular basis. And then just to look at from Rabobank, to look at the potential future outlook by channel. And again, this data somewhat outdated, so to speak. It was in July, and a lot of things have changed since then. As far as the shelter in place and some of the projections, and obviously with the vaccine coming into play in spring of next year. But from a whole perspective of what's going to occur, the balance of 2021 and into 22, as you can see, as I've been covering, a large retail, the grocery channel experiencing some good growth consistently into year calendar 22. And then the other retail, those being maybe the retail, those limited assortment retailers, the smaller retail, specialty retailers. And then it's no secret that the on-premise, while the reopening will be slow to reach, this is not going to be a turnkey light switch that overnight the business is going to improve. And then also the wine club and the DTC. While we've been seeing some recent data that DTC is experiencing a little bit more upward tick, this will more likely be updated by Rabobank going forward based on all the data we're seeing, as well as the cellar door, which is the wine tasting rooms. So again, some of this is a little, squishy as far as some of the data, and with some of the trends that have now taken shape in light of the new shelter in place, that we probably should see an update from Rabobank within the next quarter. And no presentation would not be complete without saying, the old adage, yes, Virginia, there is a Santa Claus, but Santa Claus is not escaping the wrath of the pandemic as well. I don't know if you saw in the news recently, those parents that are comfortable to take their children out to see Santa, while it might be at a distance, the fathers typically are the majority share that typically will visit Santa with their kids, and mothers and so on. The interesting thing is you look at this right in here is that while there are very interested people to go out and see Santa, the access and the accessibility and the distance options are a concern. And there are a lot of those retailers paying attention to, the need to have children see Santa, but then don't be surprised if Santa is on your next Zoom screen in your home base. So in summarizing in some of the take-home commentary, I would just say to all of those on the webinar, being nimble during these trying times is definitely an attribute that you should be looking at and aspiring to. The shift in retail landscape and recognizing the opportunities and the alternative route to market retailers, as I mentioned, is another opportunity for some of those suppliers out there looking for marketplace. DTC, commercial business, and alternative route to market, going direct is one thing to consider. And then the most important part, and you'll see this as Steve presents the bulk and the grape prices, is that the potential of decompressed margins. Retailers and consumers are not going to put up with price increases, because the fear is when you show price increases, the consumer perceives it as being, a gouging. So that hence is going to be the potential for decompressed margins based on where some of the bulk prices has risen, as well as grapes. And lastly, and most importantly, be proactive and not reactive. Any opportunity is a good opportunity, and I would just make it a point to, as that window of opportunity does open, quickly grab that opportunity to increase your business. I'd like to now turn it over to Steve. He's going to take you through the bulk and grape side of the business, and again, this is our core capability at Turrentine, and he's going to take you through the various aspects and the regionality of the grape and bulk prices. Steve?
Thanks, Bryan. And I appreciate everyone being online today, listening in. As Bryan mentioned, we're available through the chat function to answer any questions as we go through these presentations, just as a reminder. And Bryan set the stage for us with regards to what's happening in the consumer markets. In one way, he's looking at and looked at the aspect of inventory reduction throughout the system, but also the challenges at the high end and the opportunity that we've gone through at the lower end with regards to some of the data that dovetails with what we do at Turrentine. And we've had a lot of changes in 2020 from where we started the year to where we ended the year. But it's really important to know and set the stage with the Turrentine Wine Business Wheel of Fortune and remember where we are in the cycles of the business, because a lot has changed, but maybe not that much. And the Turrentine Wine Business Wheel of Fortune, Bryan started by giving some of the important information of some of the consumer trends, some of the trends that wineries are seeing. And we look at that, along with looking at the bulk wine actively for sale, the demand for bulk wine for sale, the price trends, the grapes actively for sale on the market, the demand for those grapes, maybe the new acres and what's coming on planting wise, whether there's an increase in supply or not, to really try to find out where we are in the 8 to 10 year supply cycles in the wine business. And so where we started out 2020 is that we were in excess. If you all remember, not all the grapes found a home in 2019. We had a huge 2018 crop. We had new acres and new supply for certain varieties that had us in excess. The Central Valley was in excess maybe before that 2018 harvest. And actions across all areas over the last few years had been working to try to find ways to deal with excess. Grapes removed from the Central Valley. Acres farmed differently in the coast to remove supply. Different programs at different price points were starting to be set. Negociants were coming in to try to take opportunistic purchases of coastal bulk wine, Napa Cabernet, Sonoma County Pinot Noir, Sonoma County Chardonnay, Central Coast Pinot Noir at lower prices to start private label strategic brands that helped, drive some of that business that Bryan showed you had been growing the last year. And so that's how we started out 2020. It was in excess. It was, bulk price was down, grape price was down. The change in COVID helped fix the value end of the market. In terms of the first couple of months, after the first couple of months, we started to see those wineries that had those strong brands in retail. Bryan showed Boda Box, Black Box, Woodbridge, were in the market doing well because they were placed in those larger retail, grocery, and the larger brands started to really see growth in sales. And first, maybe those larger companies shifted wine that was going to go towards a retail or a restaurant brand, an on-premise brand, to these brands, but they needed more wine. So we cleaned up the bottom end of the market. We'd also already been cleaning up the bottom end of the market through distillation and some lower priced wines at global market price. But really the $1 to $3 wine became $3 wine and really cleaned up. Now we moved to the end of the season. It's not just that we had a slower crop from the grapes being left on the vine because of the effects of smoke exposure. We also had a smaller 2020 in general across the state. Yields per acre was a very warm year. And so the yields per acre were down across all varieties and all regions to one degree or another. And then on top of that, we had the fires that reduced specifically even further Cabernet and Napa and Sonoma, Pinot Noir in Sonoma County, Pinot Noir in Monterey County were really the varieties that were greatest affected in terms of they're the largest varieties grown in those areas. And so what that did is that helped maybe the higher end move through excess faster than we thought it would, because future supply wasn't added to the backlog of supply from previous vintages. So it's helped balance out the older inventory and maybe move us to a better inventory position than we were before at the beginning of the year and what we thought we'd be. So now we're going to specifically talk about some of the markets in it. We'll look at the bulk wine market and then some specific varieties. But this bulk slide is what you generally see, the bulk wine actively for sale through Turrentine over time. It's all varieties, all vintages. This is the California appellated variety wine, Central Coast, Lake and Mendocino, Sonoma County, and Napa. And the key with this is this shows pre-COVID, we were in excess, large 2018, good size 2019, had wine on the market. This kind of shows where we were working, where we were working through inventory to get it down through the year. And that how between the lower yields per acre and COVID, we've reduced the wine actively for sale, which is a good thing for the marketplace. And when we look forward, we're starting to see 2020 wines, and because of the lower yields per acre across the state and the effects from COVID, we're going to have lower wine actively for sale on the market this year. It's also important when we go through these numbers to remember that the bulk wine market is much more volatile than the grape market. Prices can fluctuate at a much greater degree and more quickly. And just because someone can pay a very high price for a small portion of bulk wine for a blend does not necessarily correlate to them being able to spend that equivalent price for grapes for their ongoing supply. So again, bulk wine market in a better position as we finish 2020 and head into 2021. Now we're going to look through Napa Cabernet, and we're going to spend a little more time on Napa Cabernet than we do the other varieties, because mostly there'll be then some of the similar dynamics. But this chart is about the grape market and showing some of the market dynamics. This gray line is the district average, previous year's district average price. Obviously, we don't have the 2020 price out yet. This is the spot market average from Turrentine Brokerage. And then this is the spot market high and the spot market low. The spot market is what are those grapes that are harvested in that season. It's not relevant. It's not taking into account multi-year contracts from previous seasons that the district average price does. And it's not inflated by prices that are in multi-year contract prices that are indexed. What we're going to do is start out with where we were in 2020. We were in excess. If we remember, in 2019, not all the grapes found a home. Excess is defined. You could see the spot market pricing is much lower. COVID, in the market for COVID, made that market more challenged. We were already having wineries at the high end with challenged sales from the slowing growth at the luxury end from what people had planned, and there was overproduction of it. So, but we'd also, as we were in the pre-COVID time of the year, started to see a real ramp up of private label wines, those $15 to $25 per bottle, maybe Napa Cab, or $10 to $20 bottle Russian River Pinot Noir in those strategic brand retailers. It was really helping to clean up the market. COVID change for this market really intensified the demand. It made it harder at the top, but it also helped in those strong brands that were already in those strong private label companies that were already in retail continue to grow their wine. We get to the end of the season, and the low yield per acre and the fire certainly did mean that not as much 2020 was made, and wineries have ended the season in probably a better inventory position than they were projected at the start of the season, which is helping us to start as we look towards 2020. Sonoma County Cabernet is the same thing. You could see how the spot market pricing was down, similar to Napa, due to the challenging market for the luxury end of the business. COVID, again, same trend, helped to make it even more challenging on the top, but helped to move some of that private label wine through as those retailers were having success during the pandemic, and those companies putting private label or strategic brands were having success. Sonoma County, when we look, is different. Obviously the supply is going to be down from Sonoma County due to the grapes left on in the vine and lower yields per acre. So at least wineries, from the standpoint of grapes from 2020, are starting out 2021 in a better inventory position. If we look at the North Coast market, which would be Lake and Mendocino County, is different from Napa and Sonoma in the aspect that from an impact, not as many grapes were left on the vine there, but it was still a challenge. Oops, keep doing the wrong thing. Here we go. But when we look at the spot market, the decreasing district average price, the decreasing spot market shows that we were in excess in that market. Grapes were on the vine in 2019. A lot of grapes got custom crushed because there wasn't demand for it. In fact, if there was better demand, this probably spot market price the last 2 years would have been lower than what it was. COVID continued to make the market more challenging in that the higher end was challenged and we were seeing much more growth at the lower end. A lot of the strategic brand private label buyers or even the $10 to $15 California appellated buyers were looking to Lodi or the Central Coast at for some bargain prices. Buyers have helped to reduce the overall North Coast inventory because of and the lower yields per acre. So it's reduced the inventory, but we were still in excess with a lot of grapes being custom crushed by growers in 2020. Now that we've looked at the grape market in a few areas, we'll set the stage for the bulk market. Our first slide is the Napa Valley Cabernet Sauvignon bulk wine actively for sale to try to look at the market dynamics from the bulk view to give us a summary of where we are. This again highlights the fact that pre-COVID, we were in oversupply, a lot of bulk wine actively for sale, the blue up here in Napa Valley, but also highlights the work that the market was doing at lower bulk wine prices that brought strategic brand private label buyers back to the market to help them figure out ways to move through inventory like we normally do when we have these excess markets. But we found the price point at which that wine was continuing to make it through the market during this time. This steep drop off down here of volume shows what happened at the end of, was happening throughout the year as those private label brands were successful. And then we get down to the bottom down here was sort of the end of the season where the effects of the fires happened, where the lower yields happened. There were a few brands that came into the market at the end of the season and secured some 2019 and 2018 wine to make up for the grapes that they weren't going to get for those companies, those few companies that are having real success in the retail, the large volume retail market. It's not wide across the board. This real run up in price has really pushed a lot of the buyers that were in the market creating those $15 to $25 per bottle strategic brands that were having success out of the market. They've been priced out. And yes, a few people can pay these high prices for a small portion of the dollar cost averaging into their blend, but it's really making it so wine is sitting on the market longer. But inventories are more imbalanced when we look at it from this point of view. It's the same thing for Sonoma County. When you see we were in excess before COVID as we started out the season. Bulk wine price was down and we started to see through COVID some inventory moving through the market. Now, just like I mentioned earlier, COVID made it much more intense of a challenge at the high end, and then the low yields per acre and the fires have helped reduce supply. But what's important for this chart that's different about Napa Cabernet is this really highlights what happens when you have a huge increase in the spot market bulk price for a few lots of wine, but you also have the perception that everyone can pay those prices. Over the last month or so, a lot of Sonoma County Cabernet has been added to the market by some wineries that see a challenging retail market for them, had excess inventory from backlog and see high bulk prices, and so they've put wine out of the market in excess of what the demand is. So this is one of the things that happens that also shows a challenge in the market, and the fact that there's downward pressure on the top, as Bryan mentioned. It's hard to go through to retail and ask for a higher bottle price. The consumers just aren't willing to pay for it whenever that happens. It's not that a retailer doesn't want to sell it for more. It's not that the distributor doesn't want to sell it for more. It's just they know once it gets on the shelf, a consumer sees a higher bottle price and they aren't interested in buying. You can see a similar trend when it comes to Lake and Mendocino County Cabernet. We had oversupply heading into 2020 from the growth in acres in the previous years and good crop. And we've had some low prices that helped to move some of the wine, but it was still pretty challenging to get wine to move. Buyers were there at probably $10 a gallon and the sellers wanted more. Yes, we did sell some wine at higher prices. As you can see, the price went up at the end of the year in a reaction to some of the wineries, a few wineries securing supply for grapes they weren't going to get from other parts of the state and from Napa and Sonoma to put into blends. And the wine for sale did decrease, but there's still plenty of North Coast Cabernet, and there will be 20 coming ahead. So when we look at all of the regions for bulk wine actively for sale, it is a great news that the inventory of bulk, one of the bellwethers of our supply, is down considerably from where we were over the last couple of years. But the demand is still in a challenged state. There's a challenge at the high end because restaurants continue to be closed, on-premise continues to be closed, and it's a much lower price at which wine is moving through, even though it's at an increased price retail. The bottom of the market has come up. There's less older vintage wine, but the demand is really from wineries putting in $7 to $10 wine together or a $10 to $15 wine together. And so when we look forward, we see low die inventory and the interior inventory coming for sale from 2020, a lot of 2020 grapes for custom crush and pass roll. So when wineries are looking around, there's going to be some supply for them to source as they grow brands. So it's not as easy it's not going to be as easy to sell bulk wine as maybe there's a perception with a harvest as much lower yields per acre. Let's move on to Pinot Noir, and we'll take less time with Pinot because a lot of the trends are the same from Napa Valley, from Cabernet Sauvignon. On the grape market, we have to remember we were in oversupply to start 2020. 2018 was very large yields per acre, started to get new acres coming on board, a huge increase in supply. That really made the 2019 market difficult. If we remember, grapes stayed on the vine in 2019 of Sonoma County Pinot Noir. But as we got into 2020, we really did see some bulk wine movement to try to improve the market. And we also saw some of those strategic brand buyers that started in 2019 probably thinking, hey, in 2020, I'll be opportunistic for some grapes. And we felt like the grape market would improve. COVID really challenged the high end again. And then when we got to the end of the season, a lot of grapes stayed on the vine because of their exposure to smoke and the yields per acre were left. So certainly we finished out 2020 with a much lower inventory of Pinot Noir than we were projected. That was the same for Monterey County and Napa Valley in those areas. That certainly has been a benefit to it. A lot the lower yield per acre, but also a lot to the fire. But we were in excess before. And it was, not looking very positive that all those grapes again in 2020 were going to move until we had the unfortunate incidents at the end of the season with the fires. What has this meant for the bulk wine market? And this is similar to many areas. You can see the aspect of oversupply leading into the 2020 year. Lower bulk wine price started to stimulate a market and bring buyers in for these strategic brand purchases or to grow existing brands in retail. COVID made it tough at the high end, just like I said, all those restaurants closing, wineries closing, travel closing down. And we really see how the effect of the fires at the end of the season brought a few buyers into the bulk market to secure supply for their ongoing retail brands that were having success. But it's only been a few buyers. And yes, they did pay some pretty strong prices to get some wine in the market and to keep wine in their inventory and to make sure they stayed on the shelf. But it's not like everyone can pay that price. Just like Napa Cabernet, it's really pulled out a lot of the strategic brand private label buyers that were really driving the market. But good news, at least inventories are down. If you look at Pinot Noir across all areas, inventories as we round out 2020 from the backlog of bulk wine are down. But when we look forward, we see challenge at the high, a continued challenge for people to try to sell higher end wine, but we see a benefit on the floor. The floor of the market's up because of a less oversupply. Well, let's look at Chardonnay, and we'll look at Sonoma County Chardonnay again. District average price, high of the spot market, low of the spot market, weighted average price of the spot market. Now, Chardonnay was also in oversupply, a little bit less due to new acres, but a lot due to huge 18 crop and very slow sales of growth of Chardonnay. It was still growing, but at a very small level. We haven't put as many new acres in of Chardonnay, so it's not as much new acres to come on board, but there was still a smaller growth in base of supply. So it's really much more of a little bit more of a short-term challenge that was causing Chardonnay. But so we'd seen, as you could see by the spot market price, at least a stabilization of the Sonoma County spot market price for Chardonnay over the last 2 years. And there wasn't the excess of grapes on the market that there was after the 2019 crop as we got to 2020. COVID didn't really change the Chardonnay market in any area. It didn't really make it any more challenging to sell at the high. It did help us balance out some of the oversupply at the bottom. And fires in the yields per acre, yields per acre were down in Sonoma County for Chardonnay, and that's really going to be the main effect as we look forward to 2021. Less about the fire and smoke. Wineries were willing to bring white grapes in if they weren't really close to a fire and figure that the way they process it, there's less risk of the effects of smoke causing issues with the wine. So we finished out 2020 with less Chardonnay being harvested across all areas, which is certainly going to help balance out the market and improve it as we go forward. But we were still at much lower prices than we were before. If we look at the bulk wine market, it really highlights how big the 2018 crop was, how much extra wine came to the bulk market, and how challenging it had been for us to move it, how the price per gallon had come down. And we were starting to work through it to improve the bulk market had been improving. Just like the grape market, COVID didn't really change any of the dynamics of the bulk wine market around Chardonnay, but it did help at the end. The fires and lower yields per acre, and mainly those yields per acre, did help at the end, with a few buyers coming in, those ones that were a little more sensitive to the concern of smoke to buy some wine, and did pay some higher prices for it. But it has really taken a lot of buyers out of the marketplace that can't afford it, that were really driving the market. If we look at Chardonnay in the rest of the state, again, all inventories actively for sale down. A lot of the older vintage wine has been moved and inventories are more imbalanced, but demand is also fairly soft. We were just talking the other day, and we've got some larger lots of 2019 Chardonnay in a few wineries, and really some opportunistic prices, but not a lot of demand to move that wine right now. And as we start to see 2020 wines come available, it could get even tougher. So we see a pretty stable market for Chardonnay going forward. If we look at Merlot, inventory of Merlot on the bulk market is down for many reasons. Mainly is that the acres of Merlot continue to decrease with the decreased demand for Merlot. So we haven't been producing as much Merlot. Good news is with the crop being down, it continues to help balance out the inventory. Demand for Merlot bulk wine hasn't really returned. In the interior, it's returned for Merlot as a Merlot varietal. In the coast, in Napa, we've had a return for some demand for Merlot, for a Merlot blend, because it can be sold in the bottle less than a Cabernet or blended in a Cabernet. Other areas, we haven't really seen much of a demand return for Merlot, although the grapes have been in demand because there's just not as many of them in the ground. But the bulk wine is still a fairly soft market around Merlot with limited demand, but again, limited supply, which is certainly improving the supply to demand balance. When we look towards Sauvignon Blanc, it's a different market than some of the others. It's an alternate bearer. And the Sauvignon Blanc consumer demand has been doing really well in retail through this pandemic and growing in general for the last couple of years at a slow rate, not just New Zealand Sauvignon Blanc, but all Sauvignon Blanc. We've had an increased interest in grapes and an increased interest in bulk wine. The challenge is that because it's an alternate bearer, we had a huge crop in 2019, which meant 2018 and 2019, which meant a lot of wine on the market. And when we look to 2020, it's not going to be as high. We have a considerable interest in Sauvignon Blanc demand across all regions. A number of buyers, they're paying higher bulk prices than they have the last couple of years. But as the price has gone up, their demand has decreased because they can't afford those prices for where it's really selling in retail right now. What's our summary and take home from both Bryan's and my presentation about what's going on with the bulk market? Well, good news, the bottom of the market has come up, but we still have that downward pressure on the top with the luxury end as on-premise continues to be closed. And it's hard to tell where the balance of inventory is. It certainly is better that inventories are in a much better position than we were when we started 2020. The smaller 2020 crop and the COVID retail growth has been a benefit, making up for some of that on-premise. We're going to have less bulk wine for sale in 2021 than we've had the last couple of years, which will make for a better market feel. We've ended the year farther through the excess phase. The interior is farther ahead. The coast is in a much better position, but we still see a number of the dynamics in the market in that excess phase and a challenging market for sellers of wine. And as Bryan said, be proactive. The earlier you're talking to us about what you might have for sale or what your needs are, the easier it is for us to help you out and to not put yourself in a position to be reactive and challenged in the market.
Hey, Steve, I've got a one point to make. I didn't want to interrupt your flow in talking when you talked about the Pinot Noir category is, the Oregon market, as we all know, has been affected by fires as well. That Oregon market, Willamette particularly, is going to be affected. We're not going to see a lot of Oregon Willamette Pinot Noir for strategic brands, which will open an opportunity potentially for the California Pinot Noir. That bulk that you mentioned, is a larger amount that's available. So that's one notable piece that might be prevalent.
And that's correct, Bryan. Oregon was in excess before the 2018 crop in California. So they've been growing really well in that private label strategic brand type business and lower price points. And certainly the 2018 crop helped California wineries take some of that market share and gain some of that. And they're just like us, the fires really impacted the volume of Pinot Noir available in the Oregon market this year. In summary, thank you very much. Our contact information is on the screen. Feel free to call anytime for market information for what's going on. We're happy to help.
Well, thank you, Steve. Thank you, Bryan. That was incredibly informative. Some really good information there, and hopefully gives folks a pretty good sense for what they can expect things to look like in the grape and bulk wine market over the next few months. Once again, folks, I want to thank Co-America Bank and Turrentine Wine Brokerage for all your support. You've been incredible partners for us, and we couldn't present this conference without your support. I want to thank everyone in the audience for your time and remind you that our next session starts at 11 o'clock. We're going to be taking a look at the marketplace and how that's been impacted as a result of COVID-19. Thanks, and we'll see you soon.